All right, what is going on, everybody? How's everybody doing this morning? Let me just make sure the volume levels, everything's the same. There we go. All right. Been trying to play around with Discord a little bit and see if I could go live through Discord and broadcast it to YouTube, and I'm just not having much luck with that. So I'll continue to use this same thing that I'm using now, and we'll see how it goes. What is up, everybody? Tom wanted me to go over some things about, let me see here. His exact message was, he starts on Sunday and he develops a bias, but when it comes to the week, he gets stumped on picking the 1-2 trade. All right, so let's talk about that. First, I want to say something about candles because it's been brought to my attention that some people don't really understand the concept of candlesticks just yet. And in my opinion, guys, you need to know that, right? So I'm just going to do a quick, brief thing on candles and what it is, what they are, right? There's only 3 kinds for you that haven't seen the video: an engulfing, which is also known as an outside candle, an inside candle, and a trending candle. All right, so an inside candle is when the candle's range is inside of the previous candle's range. And the candle's range is the entire range from low to high, or from a bearish candle from high to low. That is the candle's range. So if this candle is trading inside of it, didn't take out the low or the high, then this candle qualifies as an inside candle. The next candle, the trending candle, is when you only take out one side of the market, right? So you only take out the high or you only take out the low. That's a trending candle. And then the outside candle is when you take out both the high and the low of your previous candle. So you can see here, this is an outside candle, right? Those are the only 3 kinds they are. That's it. There's no other kind of candle: inside, trending, and outside. So outside candles are usually known as engulfing candles or reversal candles. The reason is because if you trade up, let's go over here to the 2-week because there's a perfect example of this here. So here is your previous candle's range. A candle's range is from high to low, open and close of a specific time frame that you're looking at. So in this case, each candle is 2 weeks worth of price action. Here's your previous candle's high. Here's your previous candle's low. This candle, the open in Forex, will always be the same as the previous candle's close because there's not gaps. If you're looking at an asset that has gaps, then in this case, the open could be higher or lower depending on how the gap happens. But if it's Forex and you're looking at Oanda, there will be no gaps. So your open will be the same price as your previous candle's close. So what this infers is price trades up, takes out the high, then instantly reverses, trading down and smoking the lows. Now for a real engulfing, you need to close below the low as well. You can't just take out the low and then close back inside of the candle. It does technically take out both the high and the low, but it's showing you like it's not really extremely bearish in that case. Whereas this candle is extremely bearish. You smoked the highs by a good amount and then you reversed and closed much lower. So this shows you that chances are you can maybe be looking for continuation, which is when this candle traded up, you would have been looking for entries, which is exactly what I did over here, right? It's exactly what I did. Same exact scenario here. This bearish candle was put in, so I'm watching this level here, right? Because first and foremost, this is the open of the bullish candle. We trade up, we take out the high of this bullish candle, and then instantly reversed and closed below the low of this bullish candle. This is an outside candle. So on this trade back up, it took all week for this to happen. This is why it looks so pretty. This is how you have to become in your head. You have to wait for these beautiful setups. So all week I waited. And as soon as we touched this level, boom, I got short. Then price traded away to here. Then the next week open and boom, shakalaka to the downside, right? That's the most beautiful scenario that I can teach you of how to understand candles. Here's a trending candle to the upside, right? Then you get an instant reversal. Boom. So it's just the overall trend. That's when you're looking for the overall trend. All right, so back to answer Tom's question. When I'm looking for something to trade, specifically Forex, because mostly I'm a Forex trader, stocks, Forex, and then cryptos, I'll look for setups when, there's nothing happening, so to speak. So first and foremost, I want to see what last week done, because if I'm trying to capitalize on next week or possibly the week after's range expansion, I want to know what happened this week, right? So this week I know we did take out weekly support here. I also know we took out quarterly support here and closed lower. So this could, in theory, trade all the way back up to this quarter's opening price, as that's where the supply is, right? Now, it doesn't mean it'll stop there. It does not mean that at all. But these are the areas of which we want to look to take our trades. These are your high probable areas to look for setups. So since we've done this, had a nice range expansion, taken out supports on the weekly, the quarterly, the monthly levels, we can now look for price to possibly trade up to look for resistance on the euro, right? We do not know where that resistance will be or if it will be. So basically what I'm going to be looking for on the euro is I want to wait for it to show me that it's finding resistance. And this can take a period of a day, 2, maybe even 3. So at this point, I know I'm not necessarily looking to take a trade on euro before at least Tuesday, right? Or Wednesday even. Because I want this to trade up, find resistance, show me that it's resistance, create a barrier, basically make traders bite early, maybe look for a stop run, and then grab that entry looking for lower. So the way that I do it is I have a watch list, right? I watch all of them. Each day, your percent change, depending on if you're waking up like me before the New York Open, I look at the percent change, as this tells me which ones are moving, which ones are not. Right? If you're setting at like 0.01, then you can basically see from just looking at that you're trading at or around the open. Okay? That's not really what we want. We want to see a candle that has had a range expansion from the London session, and we want to find an asset that is pulling back for the possible entry for the New York session, for that range to continue in the direction of the trend. So if you're looking at, you have your 10 setups or your 10 pairs here. Let's go over here because these are all Forex. You got your 10 or however many you're watching here. And let's just say it's Tuesday morning. You know which ones you're watching, right? You know which ones you want to look at. Really overextended stuff, you're not really looking to trade that. And then stuff that's getting ready to break down or break out. Those are generally the ones that you basically want to look for that expansion, right? The expansion. So look first thing and see, hey, is it close? See, this one did 0.02%. That was at the close. Aussie dollar. That's the one we're on now. No, sorry. It's the Aussie New Zealand. So you can see that this one basically traded up and closed really, really close to the open. The open is here. So it did make a nice move, but reversed and closed lower on the day. So that's one way. And then the other way is to just look and see which ones have... You don't want to look for trades at highs or at lows. Let me get rid of this music. I can't stand that. I like beats. We don't need singing. Alright. So yeah. We're looking for ones that's already shown the ability to move, but perhaps haven't taken out the low or high yet, or made a new high on the day, and Yeah, that was disgusting. This probably happened at 5 o'clock. I mean, exactly at the close, that spike probably happened. That's usually what, yeah, look at that. Boom, boom. See, that's, guys, don't be looking for entries after 10 o'clock in the morning. This thing here, and its spread was 10 pips. So 10 pips from here up and 10 pips from there down, everybody was stopped out. And you can see how tight this range was all day, right? That's a tight range. So it essentially stopped out every single person that got long from, I would say, here. So on September the 29th, if you got long on this asset or got short this asset on the 30th, you were stopped out Saturday or Friday, at the close. If your entry wasn't at least 30 pips away. That stuff happens a lot in Aussie and New Zealand, mostly New Zealand. So just be careful, keep that in mind. But yeah, so we're looking for the range expansion. What was the last trade I took? I think it was Swiss franc. Swiss yen. Where was it? It was a short, but it was a good one. Let me go over here real quick, guys. Just bear with me. Okay, here we are. This is where it was, right through here. So, on the daily, like, sometimes I'll find the thing that I'm trading that morning, right? I won't see nothing, but then I'll go through all of my pairs, and then boom, I'll see one that I'm like, oh, this one right here. And that's when I usually post those, right? When you guys see me post those, that's what I'm looking at. That's what I'm going to probably try to trade that day. But this was the day that I was trading it, right? I caught entry on the open. So let's get rid of this. This is the day I traded. And basically this thing had already put in a move to the downside, but it did not take out this low yet, I think, if I'm remembering correctly. You go back into it. Here, let me do it this way. There we go, because this is what I caught here. So let's do this. We'll start there and go into the 5 minute. Alright, so this line is the open here. So basically what I was looking for is this was the London session. Put in a low and then this thing just traded up, right? And it was trading up quickly. Very, very quickly. And I'm watching the open. That's the open of the day. Now there were multiple hourly resistance and supports that you would have been trying to take, right? And this is what I said. I think I even said it to Wes in the chat. Look, when you have a bunch of conglomeration of nonsense, when you can't get an exact bead on what support or resistance is, watch the open, right? Because what we're looking to do is we're looking to capitalize on the daily range expansion. So maybe London comes in, puts in the high or the low. If in this case, put in the high of the day, right? And then trade it away. So at the New York Open, we're looking for price to trade back up close to an area of support or resistance. And if there isn't something that is obvious, the open. Because if it's going to remain to be a bearish day, you're not going to trade much higher than the open. If it's going to be a bearish day. If it's going to be a fake out move to the downside and you take entry at the open, if price trades back up into the open, you're going to get stopped out. It's as simple as that. So I didn't have a really good bead as to where my entry was going to be, so I just entered on the open. So when price traded back up into the open, that's what my entry was. So let's see what happens. My entry was literally the white line, and my stop was right above that. And my target was previous low of day. See, this is the London session, trades down, puts this in, and then trades away. The high of day was put in when? During the London Open, right here, anywhere from 2 o'clock to 4 o'clock. This was the high of day. So I was looking for that high of day to maintain or to stay, to remain the high of day. We seen a move to the downside. So during the New York Open and before, I'm looking for that to trade back up into wherever I could find resistance and support. But in this case, there wasn't one. So I was waiting for the open. Traded up into the open, triggered me long, right? My stop was 10 pips above that. Once we put in this move to the upside and took out this support, I pulled my stop loss down to the high of this candle, because once we took out this 5-minute candle with this, I knew I was golden, right? This is a very quick move away from my entry. So it's as if though it looks like I'm the one moving the market, but I'm not. I assure you, I'm not the only person that trades this way, because it works, right? But that's what happened. So, and here's my target. So if you count from that to that, your entry's roughly around in there. It was like a 4-to-1 trade. Let's do a short position here. Throw it on there. Boom. My entry was like almost right at the line. And my stop was a little bit higher. So all the way down to there. 2.67 to 1. So it's a nice trade. Anything better than 1.5 to 1 is good. Right? Took my profits as soon as we pushed down into the low. Exited 2/3 of the position, left the rest on. And then this thing carried on, right? Carried on. Traded all the way back up to my entry, but I had already taken profits at that time, so I was safe, right? And then you got range expansion to the downside. That's what we're trying to do every single day. We're looking for that, but we're not taking entries every single day, right? Because if you're taking entries every single day, you're going to end up getting a lot of stops. You're going to eat a lot of stops. So the way to stop, or the way to not eat so many stops, is to wait for those absolute perfect setups. Perfect setups. Now, that thing, if you look on the daily, it's in an, and even Jay Bradley even hit me up in instant messages and says, do you use, how often do you take against the trend trades? Because the reason he's asking this question is because he's following the rules, right? He sees that the RSI was above 50, and also look at all your moving averages are under price. So the reason I took it was simply because I just felt like it was going to break down. The reason is because the Japanese yen has been so weak. Sorry, I don't even know what that indicator is. I only have 2 on there, so that way I can close them up. But I just had a feeling like I was looking for lower prices on it. I mean, first and foremost, this thing has been in a downtrend, right? And the way that I'm looking at this over here is if this was a breakout, and it was, there's your daily close above your trend line, so that's your breakout. Here's your retest the very next day. This is your retest, so here's your continuation. So a long trade this day at or around the open, aiming for this day's high, you were successful. And then this happened. We took out everything all the way down to here. Again, that looks weak to me. So in my mind, I'm thinking this is probably a false breakout for everybody waiting for this trend line break to get long, looking for continuation to the upside. But I also knew, you see this, multiple days of straight one-sided trading, chances are this is going to be a fake out and you're going to see continuation lower. Because the market's always trying to hurt the most people that it can. The market's not moving for any reason other than to search and destroy. That's what the candlesticks are. They seek out and they destroy. These are advertisements. Each candle is an advertising instrument. It's showing you what you want it to see, so that way you'll make trading decisions based off of it, and then boom, shakalaka, you get stopped out, right? I was assuming that people were going to be looking at this as a breakout continuation, so a pullback, try to get long for continuation. But I was looking just basically for a pullback. Now this thing can find support here. See, you closed right at around the 50. So now I wouldn't be looking for shorts. Now I might be looking for longs, but not really. Because there's a lot of different dynamics that's going on in the marketplace right now. First and foremost, the Fed has got to start to taper, right? And we know that the S&P 500 does not like that at all. Now, it had a fantastic day Friday, but it's still trading lower, right? Here is that open. You traded down to it again, took it out. So now you may see this thing trade higher. And if that happens, then you're going to have to look for more or less risk on plays, right? Because this is the quarter open. This is support. That candle is just daily support. This is the quarter open. So this right here, all this was taking out these stops. And people got long on support. So fantastic day. Traded up. You closed above the Heath level on the daily, your supply zone. So you know you're probably going to be looking for at least higher prices. So in the S&P 500, the first thing that we're going to look for before continuation lower, unless you get a reversal on Monday and you take out these lows down here, or these closes, this close, sorry. If you take that out, then we'll look for short continuations. But for right now, my target on the S&P 500 is going to be this bad boy right there. So if you pull down, right, if you trade up a little bit and then you trade back down near the open, probably be looking for longs targeting that, because that's where the liquidity is. We've already taken out this liquidity with this push lower here, right there. That's your liquidity purge. You took out all that stuff. So now chances are the market's going to reverse and go look for the top side liquidity, and that's right here. So in my video yesterday, when I told everybody that I'm looking for Bitcoin to do a specific thing, it's this right here. I want to see Bitcoin trade up to this level right here, 48,787 on this exchange. On the Coinbase exchange, it's 48,800, I think. I'm not 100% sure on that. Let's go check it. But it's the same price. It's the same thing. Let's go look. Oh, sorry. I was doing a demonstration. Not quite, but almost. 48,825. All right. So what I want to see is I want to see price trade up and smoke all these stops. And then I want to see what price does. If you close strong bullish on the day, and then the next day you come in and you find an intraday support, and then you go higher, I'm going to be searching out longs, and eventually my target will be at least up here to that supply zone, right? That's if we get a close up in this area and we stay up in this area. If Bitcoin throws a wick through this here, let me get it on there. If Bitcoin throws a wick through that, like a big tall wick, and then immediately reverses, I'm shorting it, because the target is these equal lows down here. Look how beautiful those are. So this is my target for the bearish side. Now this wick right here, if you trade back down, you're going for this. Not just this. You're going for that. So this morning I did put together a little bit of a video. I haven't been able to upload it yet for the Discord members, but I'll just go ahead and do it here now, right? Markets move in search of liquidity. It's always in search of liquidity. Let me go show you this. This is the best example on the DXY. I apologize if it seems like I'm all over the place, but I didn't have much to go on other than Tom and the candles. So let's go to the old faithful. The best tool on this platform is bar replay. So if we're looking here, we see that on the hourly chart, Dixie's been moving up, right? You've got several days of price action here, and you're making higher highs and higher lows, right? So you're looking for bullish entries, more or less. Now, support's all the way down here, but we're not talking about support and resistance here. We're talking about specific pockets of liquidity, stops. That's what the market seeks out. And when I take a trade, I'm generally looking to take a trade aiming at that pocket of liquidity. So if I'm looking for an entry here, I'm aiming at this liquidity always. And the reason I'm doing that is because the market does it. I've been studying it for years and years and years. That's what the market does. So here's the liquidity all the way up there and down here. Now this swing low also holds liquidity. This swing low holds liquidity. But I'm talking about the near term, last 3 days. I only go back 3-4 days tops, because by that time the market's generally already shook out everybody. All right, everybody's already shook. So we got a high risk news event coming up soon in the FOMC. This is another reason why I say, guys, it's best to not trade during FOMC. Here's why. Boom, right there, baby. Right there. Look at this stop. You traded all the way down. You smoked everybody here. And this is an hourly candle. This transpired in 1 freaking hour. Okay? 1 hour. You traded all the way down. You smoked the stops here. Then you traded. Look at this. That's closed right above the stops. Right? Everybody is stopped out. Now let's see what happens after that. It gets even better. All right, because it came back. Remember, it came back. So here you go. Go up, take out those last highs, because anybody that shorted this bearish candle here just got smoked with that little hourly there. Boop. Everybody's gone. So where's the liquidity at now? Here. So this is your trading zone. From here to here. This will be Heath's next targets. If I find an entry, my target will be this. Well, not that. Now it will be that or this moving forward. Let's see what the market does. Stop. Collaborate and listen. There it is. Boom. Done. New liquidity here. Now, here's the market there and liquidity there. Now, my strategy would be getting you in looking for these areas, these closes. These are your entries for these possible trades, right? But that comes with time. You guys just got to give me time. I'm not the best teacher, but I will get you there. One of these days, you will be killing it. While everybody else is left in the past wondering what's going on. But here it is, right? I would be looking for longs in this scenario because price is already traded away. There it is right there. Boom. Done. Now the liquidity is here. Right? And all the way down there. So potentially each one of these swing lows can be the next target. Now, we don't know when it puts out a situation like this. Chances are it's done what it was doing here and now here. So what did we see after this? You saw trend continuation. This is a short squeeze. Right here. This is what a short squeeze looks like. See ya. Boom. That's because the liquidity was grabbed from here, 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 and then here. So people's aiming for this area down here, but the market said, nope, it's good to go. We're going to go on up. We're going to reprice higher. Then we're going to start putting in some more swing highs and swing lows to screw everybody up with. So the market's putting in these areas and trading them away from them. And you can see it, excuse me. You can see it if you look at a daily chart. Let's go look at a daily chart. So like, just look at how it works. Like here. Sorry, just bear with me, guys. Here. And then here. Well, this day took it out, so now it's there. Traded up, down, gone. There's your high. This high still intact. There it is. It's gone. So here you go. Boom, boom. Trading inside, boom, there you go. Now that's gone. There, all right. all the way down here, boom, now that's gone. Here, all right, boom, now that's gone. That's how the market works. It's literally stopping everybody out all over the place, and then when it decides it wants to trend, it trends. So our job as intraday scalpers is to identify these areas of possible liquidity, try to get situated to be on the right side of the market when the repricing algorithm kicks in and runs all the way down to stop those people out. So I'm not sure, I'm not going to sit here and say that it's sellers being more aggressive at that area. Well, technically it is, because that's where I got short on the Swiss yen trade, right? When I got short, it seems like within 10 minutes it was heading in my direction. So I'm not sure if there's just more selling kicking in here, or it's not even there, is it? It's over here. If there's more selling kicking in there, or if an algorithm is just programmed to do this, right? Go down, stop everybody out, trade up. This is where I got short. Boom. First thing we did is we repriced, expanded all the way down to this swing low. This is why I take profits there, because that's the high probable setup. I have no clue what's going to happen once this happens. For all I know, we could trade all the way back up here and hit this high. But it didn't. It traded right up there and then boom, boom. So I'm assuming this was probably just to stop people out getting long, searching for this to be ran. But it didn't run it. It turned right around and ate up all that liquidity. Boom, boom, boom. Then you're trading sideways for the rest of the day. Just chewing up traders. If you got long there, you got stopped out. If you got short there, you got stopped out. So the entry is a couple hours into the opens. That's it. Anything after that is nothing. Nothing. So train yourselves to look for those high probable areas or those high probable setups, and then leave the rest for later days. Like I took one trade last week, this one. I didn't see anything, and plus I'm short. I'm like last week, before I even took the Chef Yen trade, I was already up like 487 pips from a pound dollar short and a euro dollar short. And I was mostly also focusing on Bitcoin because it was doing some crazy stuff. Let's be frank, right? This thing is absolutely, and no one knows, there's no news out there. Well, I know exactly what it's doing. At least I think I do, right? The selling is exhausted down here. There's no shorts being taken down here. So the market has to go find liquidity. The only other place there's liquidity once you get above this is all the way up here. Now also, this is a short squeeze, and I'll show you why right now. Let's go to the daily. Let's get our indicators on. Here you go. There's your daily. So if we back it up, let's just back it up, back it up, back it up. Here's you go, right? Now, when this is the resistance level that I'm watching. Right here. I'm already short Bitcoin from here. We trade down. I take profits, remove some of my thing. When this trades up and finds resistance again here, I'm looking to re-enter. That brought my cost basis down. So at this time, I'm essentially risking just unrealized P&L because I had my stop at break even. So I wasn't risking any new money. I was only risking the unrealized P&L that I had from this replacing, where it replaced me down here. So I'm watching this candle's close because this is resistance. It is, right? It is until it gets a close above it. So let's just do 1, 2, boom. There we go. Now, I see we have broken out above resistance, closed above resistance. Here you go. Look at this. People are looking to short this. I'm not. I'm taking my profits off right now because I'm seeing something that I'm not liking. I'm assuming Bitcoin's going to roll over and take out this low and head lower. This is nothing what I wanted to see. Support, check. Support, check. Support, check. That's 3 days of checking support. If this thing is weak, I got news for you. It's not going to take 3 or 4 days to break support. It's going to do it soon, right? Because in bearish markets, price moves quicker, lower because of fear. So this isn't fear. This is not fear. In fact, this is something different. So I took my position off, waiting to see what happens. We're checking a 50 spot here. People are getting short, and they are putting their stops here. So let's get rid of this line because it's done its purpose. Now, all the algo traders that put sell limit orders at the 21 or the 50 EMA looking for trend continuation, because at this point you're under the 50, so it is technically bearish, or has bearish momentum, and most of your moving averages are above price. The only one that ain't is that 200, and that's enough sometimes, guys. That 200 is enough sometimes. You don't look for new shorts when you're around that. You want to short away from it, up here maybe, for instance. But anyways, so many people are getting long because of this, because of that, because of resistance. I mean, you name it. Because of downtrend, because of this. All of these people are getting short because of all of this right here. What happens? Boom, shakalaka. That's what happens. That's a short squeeze. Now, people that are bullish, I'm a trader. I don't care which way price goes, guys. I love Bitcoin and I want to buy as much of it as I can, and I will for the rest of my life. But I'm a trader first and foremost. This thing right here has gotten so many people FOMOing into this because this is a bullish move, and they're not wrong. It is. It absolutely is. But it's mostly a short squeeze. Your sellers are exhausted down here. They are unable to push price lower, which means you're going to have an imbalance of buyers and sellers. This is an imbalance right here. The algorithm reprices up higher because it must find that price where the buyers and sellers are neutral again. So whether you call this buying pressure, or whether you call this a repricing, or whether you call this algorithm just moving higher out of this area because there's no liquidity here. It needs to find liquidity. It found it here and absorbed it all. So now it's chewing through those orders. The market's bouncing back and forth in price discovery. This is what I'm looking for here. Once Bitcoin trades above this will tell me what I'm looking for, right? If it trades up and rejects, I'm looking for shorts, and I'm targeting this stuff down here. If it trades up and holds, finds support, starts making higher highs and higher lows, then I'm looking for this up here. Boom. These are your three areas in the market right now that are in play. This low, this high, and this high. Anything else is garbage. There's nothing else that I need to worry about. So when I tell you that you just have to be patient, that's what I mean. Like, that's what I'm doing right now. I'm not putting any new orders on this. Not right yet. I did take a trade, however, this morning on this. DYDX. Now, we were watching this yesterday. Me and Ed were watching this yesterday. But this thing pretty much was moving lower. I was looking for a support hold here. It's daily support. It's broken down. But you can see how it's not able to get lower than this, right? Now, some people call it a double bottom or whatever. They can call it whatever they want. But what I call it is an old resistance level holding a support. Multiple attempts, support, trade up, down, support, support, support. So I put a long on this lower wick here, right? And I'm just waiting to see if price can go up higher. What it's struggling with is this support level here. This old support. See this old support? Held. There's your breakdown. There's a retest. Now you're back in it, retesting it again. So I don't know if it's going to hold. I don't know if it's going to go higher or lower, right? But my entry's here. The position, last time I looked before I went live, was up 9%. So I can close the trade out right now if I see what I don't like, right? So I'm just watching to see what happens. Now the last hour, this thing was looking bearish, but it has since traded up, put in a bullish close, and now you're seeing another bearish candle. So I don't know, right? It's looking good. This candle here, this wick lower, this is when I was thinking that I was probably on the wrong side of the trade. Then it closed up green, and then you got another hour continuation. So I'm going to hold it, because as of right now, it looks like I'm on maybe the right side. But I don't know for sure if I am or not, right? Let me see here. Let me scroll up and just make sure I'm not missing anything. Thanks for all you do. Could you go over to Chef Win? I think I just did pretty good. BMY long. Good morning, y'all. Good morning. We're trying to enter short Bitcoin. Could we wait for more bearish reaction? More reaction. Yes. Yes. If we're waiting on Bitcoin. We're waiting for Bitcoin to show us what's happening. Is it just a bullish fake out move to the upside to purge that liquidity for another run lower, or has something else changed and the market wants to trade higher? The market wants to trade higher, then we want to look for bullish entries, but we don't know that yet. We don't know that's what the market wants yet. We got to be patient. Good morning, Jay Bradley. Heath, your short vids are getting better. Could you please check BTC ADA? And then, yeah, I'll go back and look at all these for you guys. I just want to make sure I'm not search and destroy. Yes. Just checking in. Okay. All right. So okay. Thank you guys. Marie, I did go over Chef Yin. If you want me to go over it again, just drop it in the bottom. I am at the bottom of the comments. So, BMY long for Brian Rubin. I don't know what BMY is. Bristol Myers Squibb, or is this also a? Why is that orange? Is BMY also a crypto? Let me just see. No. So you're looking at Bristol Myers. All right. So first, I gotta turn this off. I can't stand intraday data. I don't remember how to do it actually. Symbol. Where is pre and post market data? Here we go. There it is. Sorry, guys. Alright, let's get off of this. Go to the daily. See what's up. It looks like it's getting quashed. It's getting sold off pretty hard. Right? A lot of supply. For some reason, they just attacked this thing hard to the downside. And it's basically just rocking and rolling. Now you are coming into support down here, right? So you're definitely not looking for any shorts. Not while you're here. Oh, what the? I clicked that line 30 times. Now there is a bearish close below the support level. So you may head lower, right? But this is a very strong move. And pretty one-sided. So expect price discovery, which means range-bound, choppy price action for a while until it decides what it wants to do. I mean, I'm sure there has to be some reason for this other than just what's been going on in the S&P 500. Maybe this company had a lot of that debt, that China debt. I don't know, but they suffered. So yeah, if that clears up, it might find support here. And the buyers might be tempted to come back. I'm going to assume that's March of 2020. It is. So, I mean, this thing trades very crazy. Sideways to up, right? Sideways to up. So let's just see what happens. Next area of support to watch, if you lose this area, is here. There. All right. So that puts you down around 57.76. I don't expect it to go down there now. Even if it tests this bullish candle, I am anticipating this thing trades sideways for a bit. This was a pretty big move. Pretty big move. And it may have just been 14% down, so that's not that great. I mean, 20% in these assets is a bear market. So it's not in a bear market yet. But tech and everything was selling off as well. I think this one got hit worse. So just see if it holds support here and here. If you're looking for bullish entries, then you might be able to sneak some in this area. Just make sure you keep a pretty tight stop, like this swing low, right? Until it gets into a position where we can literally attack it. Right now, it's just been in a straight decline, and it's just finding support here. So multiple days of supports found here. This run lower was probably just to stop those guys out, and you can see a bounce now. So just be careful. I would stay away from it, to be honest with you, until I found out what was the cause of that. I mean, this thing isn't any stranger to having pretty decent sell-offs, right? Here's earnings way back here. So it wasn't earnings. I would have to assume that it was the China stuff that was going on with that other company. Where he says, hey, thank you for all you do. Okay. Gotcha. Appreciate it, Marie. Yeah, so I would probably stay away from that one for a little while. Let's see what happens. But if I was going to choose a direction, put a gun to my head, Brian, I would be looking for bullish entries. Yes, absolutely. At support, you're looking to buy at support. You're not looking to sell at support. And that's a pretty big move, right? So I could see you getting a bounce anyways. And then, what was the other one? BTC ADA. It's going to be ADA versus Bitcoin, I'm assuming. Yeah, there it is. Yeah, Cardano was extremely strong. So it's just chilling. It's just chilling out a bit. It's going to be... I mean, it's definitely in an uptrend, man. And it's at support. But you broke down below support. There's a supply zone there. Let me get rid of all these levels. Here. So if you're not closing dailies below that, that might be a good spot to look for potential entries to the bullish side. But if Bitcoin starts ripping, just understand that this support is not going to hold, right? Because you're trading Cardano versus Bitcoin, and the only way that this asset goes up is if it's stronger than Bitcoin. And you can go look at ADA versus USD, and you can see here, if you like crop this pattern right here, it's nowhere even close to being as strong as Bitcoin is right now. See? All right, so using that with just that amount of knowledge right there can keep you at least on the cautious side for looking for bullish entries down here. Now, if you just start trading, because this can be a trap, but you've had 2 days down here to decide if it's a trap or not, and it's not. This is going to probably trade lower. The reason it stopped here is because of this last bullish candle. That's your support. Old resistance support. This is supply. So it's two different things, but basically the same, right? You're looking for price to stop there if you're looking for bullish price. So watch this area here. If you get a daily close below it, then you're coming down here for that. But as long as you're not closing below that, you can probably look for at least a bounce. But if Bitcoin does what I said earlier, I don't know if it's going to, but if it does, test that liquidity and then just fall, just fall, then we're looking for shorts. This will probably bounce, right? But I'm only looking for that to happen as if basically the bull market cycle's over. I don't know if it is. Nobody knows if it is. Right? Nobody knows what Bitcoin's going to do, guys. I'm just looking for areas for possible trade entries. So I need to see what happens there first and foremost before I can even start to get a plan going. I need to see if it does that. Because if it trades away from here and does not go up there, then I am going to be looking for longs. Because it will, in my opinion, smoke that before it goes lower. It don't have to, because Euro USD didn't. I'll go show you what I'm talking about. Euro USD did not do what dollar did when it had that big move there. See? Here's one here. I mean, I guess you could call that one. If anybody's stop was setting there, it's probably done. So, yeah. But it doesn't always, right? Especially when it gets going in a trend. Here it is. You never touched it. You just rolled over. So don't just look for every swing high and every swing low to be hit. You have to basically put it into a narrative with your overall bias. And that's what's going to take a long time for you to learn, unfortunately. But I was bearish here. This is roughly where my entry was for shorts. I don't think it was all the way up there. Maybe it was in here. I know it's a nice trade, but I'm getting ready to look to probably close it down. There's a crazy looking trend line right here that I found accidentally the other day. And basically the reason I found it was I just did something like this. From this swing low to this stuff here. Boom. So it's not like perfect, but you can definitely see you broke out here. You traded right down below it instantly. That's a bull trap. That's a trap right there. And then price reprices lower quickly. The next 3 days, you're just going straight down. Where's it at? I already lost it. Here. Straight down. Then you traded back up to it again. Same thing. Here was the first time that you broke it. Then you got up. Boom. And it held. All of this basically kind of sort of held. And you're coming down to it. So, I mean, like, this is probably going to be an area to take profits. And wait for a lower high. To look for shorts. For new shorts. And I could just leave it. Let it ride. Like I usually do. But, I don't know yet. I haven't decided. I mean, it's situated perfectly for a nice move to the downside. Or at least another push lower. Possibly to here. Or at least there, right? So we'll see. I don't know. I haven't made up my mind yet. I know both of them are in pretty good profits. And I could just cut them in half maybe and leave them on. I don't know. I'll figure it out. So yeah. Are we trying to enter short for a bit? Yeah, we're waiting. Yes, waiting. For sure. Let's see here. Bitcoin is getting lower and lower. Yeah, but it's not. I mean, it's an inside day. It's just when you have a big move like that, price is going to trade sideways. It's just an inside day. You've got 2 inside days. That's it. Nothing major. This is to be expected, man. This was a massive move. Big, big, big move. This candle is as big as this bearish candle. So that's a big move. And look what happened when you put this move in. You traded sideways for what? Almost 2 weeks before you got a move to the upside. So this thing could trade sideways for another 3 or 4 days before it pops up above there or goes lower in search of support to then run above those swings. And if that happens too, I will take that long. But it won't be nearly as good to me. Like, because I was looking for this to continue. There's a reason for this. Has to be. Now, they could have just been a lot of sellers sitting here. From all of this stuff. They think this is the top of Bitcoin. Like I've been explaining for months. And they just want to exit here. So they panic selled out of it. And that's why we've seen this repricement to the downside. But we also know that... There's a lot of billionaires buying Bitcoin. And that changes the dynamic a little bit. Michael Saylor's into this thing for a few $1 billion now. Elon Musk is into this thing for a few $1 billion. There's other people that are in this thing for a few $1 billion. So I don't know where it's going to go. But these are the areas that I'm looking at. right? I will get long here if we do not take this out. Price trades up and takes that out. Do not look to get long here. The only way I'm looking to get long here is if price trades down before taking this liquidity out. Okay? The reason being is because this is just going to set up a trap for the shorts. And if that happens first, then it'll look more to me like the market has changed. Because if you do, like if you trade away from this liquidity and leave it up there, then it's a target. So the market's looking at another impulse leg to the upside, which means that the short side might be done, which is why we need to wait. Need to wait and see what happens. If it does trade down, I will look for bullish entries as low as to this line as I can. If it doesn't tap that liquidity first. If it taps that liquidity and then comes down, then I'm looking for shorts. I will let a bullish range expansion, a daily range expansion, trade up into here and reverse. Then I will look for pullback entries to get short for the continuation lower. Because it is still in a downtrend, and it will still be in a downtrend until you take out this swing high with a daily close. Because this is your lower high, right? So your trend now is low, lower high, lower low. So as long as you're not closing up in here, you're still in a downtrend. The longer term, I mean, you go look at a yearly, this thing is absolutely bullish. And what I've seen a couple of people saying that, you've only had 2 bearish years for this. Let's go to the BLX. You've only had 2 bearish years on Bitcoin ever in its entire history. And on this occasion here, you had a bullish. And that's what they're looking for here, right? Bearish candle, bullish. That's what they're saying. Like, that's what your models, everybody that's showing the bullish models, the 4-year cycles, the coin, all that stuff is predicting this to happen. Same thing had happened here, right? Boom, 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 up. Come back in for a pullback, found support. This support held for years, by the way, right? Support, hold, test. This was the absolute beautiful, most perfect spot to get long on Bitcoin. Here, $3,700, and that's where I did enter a lot of my position, right? Because of this. That's a support, massive support, not the trend line, the horizontal. I don't care about trend lines. Horizontals, I put way more weight on horizontals. But this is what they're looking for, right? They're looking for a big range expansion like this from the 3rd year after that bearish market. Bearish market, you're on your 3rd year. You've got 2 months until the close of this candle. So for their thesis to work, they really need to start seeing some massively big candles. Some pretty decent size range candles, right? What is going on here? That's not even the right one. This is the wrong thing. But they're looking for that. They're looking for this to continue higher. So if we break out above this swing high and we're closing, then it looks like the bulls have regained control of the asset. Oh, gotcha. What do you expect for pound USD for this quarter? It looks like it wants to go lower. Because it's not looking good, right? I'm looking for this thing to pull back, find resistance somewhere up here. This would probably be the best spot. Probably around here, because you have this open, this closed, this open, and this wick lower. Then you traded away from it, came up in here, put in this lower high, and there's your range expansion to the downside. So it's hard to say though, because this could also have been a buying opportunity for anybody that thinks that pound's going to break out above that. But the thing is pound has already broken out above this on a regular log. If you take the log scale off, this trend line has been already broken out. You've already broken out. You're just not seeing any bullish continuation up there. So I think you're going to see a pullback on the pound at best. I'd probably be looking for new short entries roughly around 136659. Try to line that up with a weekly support or resistance level. When I look at that, it's right there. So basically this whole quarter's range expansion was put in like the last 4 weeks. And mostly last week. So will it trade back up to there? I don't know. There's a weekly support level there. Watch that level first for short entries. Because it did close well off its lows already. So let's do it like this. Let's put this level here, this one, as that bearish support. Look at this perfect test of it. There, that's a hold. So this will be my first level that I will watch for possible resistance, but we'll need to see daily rejection there. I cannot just take it on an hourly test of it. An hourly test is not good enough. I need to see like an absolute just like price halts there. Like it's doing now, right? Stop. Next day stop, but maybe close lower. Then upon resumption back up to test this candle's close. This candle's close would be your entry if you were going to see that lower expansion, right? And that's just what I'm thinking. It doesn't mean it has to happen. This thing could trade all the way back up to here just because everybody's so bearish on it. But it's not just me. I mean, there's a lot of fundamental guys that I listen to. They're expecting more bearishness on the pound and the euro as well. They're expecting a stronger dollar. And I do respect these fundamental guys because they've been in the business for a very long time. So yeah, I let them be my fundies and then I do my own technical stuff. But it looks like it's going to go lower. So give it a day or two to play around that, and then that quarterly open. That weekly, and then that quarterly up here. So that gives you 2 decent prices to watch for possible resistance. And that would be a roughly a midpoint test of this bearish candle. So that could be the most best spot to look for bearish entries. That's just right up here at this daily Heath level. So I mean, it's lining up. Looks like it wants to go lower. Whether or not it does, that's 2 different things. But yeah, I think it goes lower. How is AXS USDT ripping faces off? Probably. No, actually, this one's pulling back. I think it was that other one, ASZ, that's ripping faces off. Where's AXS? AVA? Oh wait, that's what you asked for, wasn't it? AXS, yeah. It's ripping faces off. I get this one and AVAX confused a lot. AVAX is pulling back, right? It's trying to break out, but it's being hindered by that. But if Bitcoin keeps going higher, it will too. AXS is just smoking people, man. AXS. It's just, I don't know what to say. It's extremely, extremely overbought. I mean, to go from oversold like that to overbought in the span of like a week is insane. This could very well be getting ready to top out. I wouldn't look to buy it. It's already had such a massive, massive run. So I guess just watch intraday price charts if you're looking to possibly look for day trades, right? If you're looking to hodl this, then you've missed the boat, I believe. It's so oversold. I mean, overbought. It's just insane. Look at these. It's a daily range expansion. We did have someone capitalize on that, so good for him. But I can't tell you to do anything with it. Just when I thought it was over with down here, I thought that we were going to see a pullback, and then nope. Straight up smoked all the shorts. So when something's bullish like that, I guess you just look for bullish entries until it stops being bullish. Right. Okay, target should be taken off, right. No, you don't want to take new longs up there. Absolutely not. No, you want to be taking profits if you did get long down here. Because if Bitcoin crashes, guys, these cryptos are going to crash and burn. I'm not saying that I think Bitcoin will. With the overall fundamental thing playing out right now with the dollar, with the tightening, all this stuff, you could see Bitcoin come off. Absolutely. So just be careful, especially on these high flyers. They have already flown so high. To continue to look for more is just crazy. I mean, you can do what you want, but I would not be buying that. This one too was just ripping faces off. If you want to buy one, look to buy this one, right? Cosmos. Look for bullish entries on this one, even though it's had a massive run to the upside as well. There's a lot of people saying that this thing could see $100. Now that's just absolute speculation. Absolute speculation. But the founders and other people that follow this asset, I've been reading some articles, they all believe that this thing could be trading a lot higher. So if you want to trade one, trade this one. It's seen crazy gains, but not gains like these ones here have, right? Alright, guys. Fizz long. Alright, let's go look for Fizz long. USD. Nope, it's not. It's a NASDAQ stock. Fizz long. Fizz looks like it's wanting to break out. It does. I don't know what it is. National Beverage Corp. Here's resistance, and it broke out above it. There. So you basically have a small price range that you can watch. If I could get these things to hold. There you go. There and here is resistance. Now, this has already came down and took out that stuff, and you got a bullish move from it, and you're basically holding support. A lot of people are trying to short it here because of this swing high and this swing high, but if you do get a breakout here, you could look for this thing to just fly, right? And here's the thing also on it. I mean, it's putting in ascending wedge. These things usually break out bearish according to pattern traders. I am not a pattern trader. If I had to guess, I would say that this thing is probably going to go higher. So I would want, if I was looking for a buy on it, I would want to buy it as close to 51.74 as possible, because that's support, right? Or this support down here, this bearish close, or this bearish close. Not up here. You don't want to buy it up here. You want to buy it down here or down here. If it comes back down there, then chances are it might not hold. So just keep that in mind, because there is pattern traders will be looking to basically short this thing because it looks to them like that. I mean, I think it's good. I think it's going to go higher. That's the thing. It's wedging up at resistance. So that typically could mean that it's going to break out soon. So look for support tests. Look for that support to hold on a daily closing basis. So if you get a bearish candle down into 51.71 and it trades farther down than that price but closes back above it, the next day I would probably be looking for bullish entries. As long as you're not closing below that. You close below that, this one's going to be the next test, because you've already thrown a big wick down there. So there's no reason for price to trade lower. There is a reason for it to trade higher, though, and it is right there. Boom. So that would be my target. So yeah, keep an eye on it. The problem is this already took out that and that. So that's a beautiful target. Perfect. Because this and this has already been taken out by that. If price starts to trade lower and you get that close below here, this is going to be the target. The bearish target will be that wick. As long as you're not closing bearish candles below that, this is your target. And then I'll do one more. Let me do Mr. Epic. I'll do Luna or Adam for you in the Discord. Let me get this one for Daga because they're not in the Discord. So if you please don't mind, that is, because I gotta wrap it up shortly. Yeah, Luna broke out, made new all-time highs this morning. So I mean, yeah, I wouldn't look for buying it, man. This is the thing. I would want to see it break out with a strong bullish close, then come back in for an old resistance test, and then see if that level holds on like a 4-hour basis. But you can see that you have made a new all-time high, but you're trading under the resistance. See this? You're trading under the resistance. So what I typically do in these scenarios is I will go find a smaller time frame bearish candle and see if that price holds there. Instead of trying to take an entry here, you can see how, yeah, it looks like you're going to get a test of this price first. So if you get down there and hold, then maybe only be targeting that wick though. Don't look for this thing to continue on up into $1,000 because these things have already had such a massive move. Some of these things are you're looking at 14,000% gains. So a pullback is probably incoming pretty soon, guys. Let's see what Luna did. Oh, that's all? Only 40,000%? So be careful. It's 40,000%. Is how much this thing has ran since March of 2020. 40,000%. It's probably time for a pullback. Or soon. Alright guys, if you have any questions or comments, just leave them in the comment section. Obviously, I will answer them. And as always, make sure you trade safe, trade smart, and happy trading. And I'll talk to you in a minute, Mr. Epic. Y'all guys have a great day. If you need anything, don't hesitate.